Revenue share financing. Win-win growth. Call 888-653-0124 today or click the link in the description to learn more about our 1-minute application and share your success story. You want to expand your business? You've built something great and now you're ready to take it to the next level. Maybe you've got your eye on a new location or 2. Or 3. But here's the thing, expansion costs money. A lot of it. And you've probably asked yourself, where do I get that kind of cash without giving up control of everything I've worked so hard for? That's where revenue-based financing steps in. Imagine a lender who doesn't want a piece of your company but wants to grow with you. Revenue-based financing companies don't ask for equity or a hefty chunk of ownership. Instead, they offer funds in exchange for a percentage of your future revenue. It's a simple agreement. You get the money you need now and repay it as your business earns more. The more you make, the faster you repay. But if things slow down, your payments adjust accordingly. No stress about fixed payments when times are tough. You might be thinking, sounds too good to be true. But it's not. Revenue-based financing for startups and established businesses alike has become a practical alternative to traditional loans. Unlike banks, revenue-based financing lenders don't require years of financial statements or pristine credit scores. They look at your potential, your revenue model, and your growth trajectory. If they believe in your business, you get the funds. There's a reason this model is catching on, especially in industries like SaaS. Revenue-based financing for SaaS companies is particularly popular because it aligns perfectly with the recurring revenue model. Your business earns revenue month after month, and your payments to the lender come from that steady stream. It's a win-win situation. Let me tell you about one business owner who faced this exact dilemma. She had a thriving cafe in a bustling downtown area and wanted to open a second location. Traditional loans weren't an option, the bank wanted a mountain of paperwork, and the interest rates were sky high. Then she discovered revenue-based financing. She partnered with a lender, secured the funds she needed, and 6 months later, her second cafe was up and running. The best part? She didn't lose an ounce of control over her business. Now, she's planning a third location. But what if my revenue dips, you might ask? That's another benefit of this model. Revenue-based financing terms are flexible. If your earnings slow down, so do your payments. No penalties, no late fees, just a smooth ride until things pick up again. It's financing that works with your business, not against it. Now, some might wonder about the cost. Isn't this more expensive than a traditional loan? Not necessarily. When you factor in the flexibility, the lack of equity loss, and the ability to grow your business without giving up control, the value becomes clear. Plus, revenue-based financing interest rates can be competitive, especially when compared to the cost of giving up equity to venture capital. You might also be thinking about the paperwork. Revenue-based financing agreements are straightforward. No endless pages of legal jargon. Just clear terms that outline how the financing works, what percentage of revenue you'll share, and how long it's expected to take to repay. It's all laid out in a revenue-based financing term sheet, making it easy to understand and agree to. And here's another thing to consider, the sense of partnership. Revenue-based lenders are invested in your success. They don't just hand you the money and walk away. They want to see you grow because their repayment depends on it. It's a different kind of relationship, one built on mutual success. Now, let's address a common concern, taxes. Revenue-based financing tax treatment is pretty straightforward. The payments you make are typically considered a business expense, which can reduce your taxable income. Of course, you'll want to consult with a tax professional to understand how it applies to your specific situation, but rest assured, it's a well-trodden path. You're probably wondering how much you can actually get. That depends on your revenue, your growth projections, and the lender. But with a revenue-based financing calculator, you can easily estimate what's possible. Input your current revenue, and you'll get a clear picture of the funds you can secure. So, what's the catch? Well, it's not for everyone. If your business has erratic revenue or isn't generating much yet, it might not be the right fit. But if you're growing steadily and have a solid revenue model, this could be the answer you've been looking for. Here's where it gets interesting. You're right on the edge of a big decision. You could stick with the status quo and watch opportunities pass by, or you could take a leap with revenue-based financing. Imagine what you could do with that extra capital. More locations, more staff, better equipment. The possibilities are endless. But don't just take my word for it. Talk to other business owners who've gone down this path. Listen to their stories, and you'll hear how revenue-based financing transformed their businesses. These aren't just numbers on a spreadsheet, these are real people who've seen their visions come to life because they found the right financial partner. They'll tell you how, instead of being stuck in a rigid loan agreement, they had the flexibility to adapt as their business grew. They'll share how they never had to worry about a board of investors demanding changes or how they retained full creative control over their brand. You've probably heard horror stories about businesses losing their way after taking on traditional financing. Maybe you know someone who had to give up equity, only to find themselves sidelined in their own company. It's a common fear, and it's valid. But with revenue-based financing, you keep your hands on the wheel. You steer your business where you want it to go. Now, think about the future. What could your business look like a year from now? 5 years from now? Picture the new locations, the expanded product lines, the bustling customer base. Revenue-based financing could be the key that unlocks all of that. It's a way to fuel your dreams without the usual strings attached. But don't wait too long. The market is competitive, and opportunities can slip away if you're not ready to seize them. Revenue-based lenders are looking for businesses like yours, businesses with potential, with a solid foundation, and with the ambition to grow. If you've got that, you owe it to yourself to explore this option. And remember, it's not just about the money. It's about finding the right partner, someone who believes in your vision and is willing to invest in it. The largest project finance lenders may not be interested in your cafe, your software company, or your online store, but revenue-based lenders are. They see the value in what you're building. So, what's holding you back? Is it fear of the unknown? Concern about the terms? Those are normal hesitations, but they don't have to stop you. The truth is, revenue-based financing is designed to work with your business, not against it. It's built around your revenue, your growth, and your success. Imagine the relief of knowing that your financing is tied to your success, not to a fixed interest rate or a looming deadline. Imagine focusing on what you do best, building your business, without the constant worry about how you'll make the next payment. That's the freedom revenue-based financing can offer. Your business deserves the chance to grow, and you deserve a financing option that respects your hard work and vision. Don't get trapped in the old way of doing things. There's a new path forward, and it's one that's already helping countless businesses like yours reach new heights. Call 888-653-0124 today or click the link in the description to learn more and share your success story. The next chapter of your business journey is waiting to be written, and with the right financing, it could be your best one yet.